Hey everyone, Matt Brady here, your Carolina mortgage coach. And on this episode of Behind the Closing Table, I'm with Charlie Lane of Lane Law, our first closing attorney we have on the podcast.
Yes.
So, yeah, the first and the best. So, looking to get a lot of information. I think this is a topic that not a lot of people talk about from the buying and selling side on what to expect. So, I'm excited for this conversation and a different viewpoint than, the views that we've had on here. So, Charlie, thanks for being here. And why don't you tell everyone a little bit about yourself and your practice?
Yeah, thanks for having me. Charlie Lane. So I own Lane Law PLLC in Charlotte, the owner, the attorney, the paralegal, the janitor, the marketer, the whatever. I got out open here last year, April of 2025. Been doing pretty much strictly closings and real estate practice since 2018, and been practicing law since about 2015. So I've been doing it for a little while, but finally made the leap last year to do my own thing and sort of see what I could do with it. And it's been a lot of fun, a lot of work. Certainly being the only person
Yeah.
in charge and everything, but it's been also really rewarding and kind of on a personal level. But just the client outreach, the working with people like you and our real estate agents and people in the industry, kind of putting my own
Yeah.
name on it and doing all that has been really fun.
And it really lets you, build out your process. So when you're ready to onboard more team members, you kind of have all that built out. So it's a seamless process then.
Right. Yeah. It's been what I've been doing pretty much every day for the last year is the way my brain will work is just getting something ready for a closing. I'm like, man, I could automate that. Let's hop over here and make this
Uh-huh.
more process more automated. And that's like, wait, no, let's just get this closing done first. And and
Yeah.
tonight we'll work on that. And but it's been that tinkering. And when I first got open, it was my social media was kind of tongue in cheek, me ripping up cardboard and putting together office chairs. And then someone called and wanted to work with me, and people kept calling, and then we're off to the races. But I'm in the process now of adding in some contract help to kind of hopefully expand, get the closing count up, and keep an eye and hand on the process, the communication, the predictability of everything, and eventually maybe hire some people. But for now, just trying to kind of, like you said, grow with the process. And it's never perfect. It's never done. It's always an evolution. But it's nice to have my hands on that and be able to do it exactly how I want to do and tinker and get it right.
Definitely. So was real estate law always the plan, or did you start real estate law and then move in, or how did that happen?
No, yeah, I equate it to kind of like the career fair person that's like, real estate was what I hated to do in law school. I I in law school, you're always required to take certain classes. Real property is one of those, and I loved my professor. I hated the subject matter. It's mostly dry and old and boring and easements and dense language, and that's certainly an important foundation. It's not like we're never going to use that again. We use it every day, but it's such a slice of what real estate practice actually is day to day, and especially owning a business, it becomes an even smaller slice of the pie. But no, I got into in my first job at a firm. I was doing title searching, real estate, commercial real estate, foreclosures, lawsuits, estate planning, a little bit of this, a little bit of that, more of a general practice operation. Wanted to kind of grow from there into something where I felt like I could specialize a little bit more rather than pieces of the pie. I can sort of take the whole pie myself, and that ventured me into real estate. And from then on is when I started doing pretty much closings and anything related to that as my day to day practice. So it evolved over time and into I always enjoyed the title examination process was very like logical to me. It's interesting. You're sometimes you're researching the old family farmland and putting pieces together on the tax maps and figuring out where land has changed hands and why and when and putting together this picture for your clients and whatever it is you're trying to do. But that sort of always played well with my strengths and my interests is diving into some of those things. And and now that's still a piece of what I do every day and hopefully on a good day that there's nothing wrong, there's no problems to solve out, but it's all about going back in time and coming back forward and we'll get in that probably. I'm assuming you're gonna ask what I do on a daily basis and what my role
Mhm.
is, but a big piece of that, a spoiler alert, is making sure people buy what they think they're buying and for how much.
Mhm. So yeah, let's transition right into that. People probably want to know what actually, goes into being a closing attorney on a real estate transaction. And, you know, let's dive a little bit into that. What actually are you doing for the buyer, for the seller? Like what are you checking off on? What's going into it that people might not expect that you're doing or find surprising to see that that's what you're doing behind the scenes?
Right. Bird's eye view, the closing attorney has kind of two most critical functions. It would be the title and the money. So I'm getting the money where it's supposed to go from where it's supposed to come from and making sure that the keys that are being handed across the table go to the right door that people think it goes to, and just oversimplifying it, but it's essentially the simplest way to put the scope of our representation is we are hired to carry out the terms of the contract that the buyers and sellers entered into. And if there's any kind of disagreement about what that contract is, then maybe we're not jumping in there going to court for that, but we are
Mhm.
guiding the parties through that process of
Mhm.
I am buying this from you, you are selling this to me, and this is how much money we're exchanging for it. And
Yeah.
sometimes that's very simple, and sometimes it's more complicated. Is this a residential home in a subdivision with a very cookie cutter rectangular lot? Or is this farmland with acreage and we're not exactly sure where the pins go and where the tree goes and where the survey lines are? So it's making sure of all that. It's making sure the title is passing clearly. There's no hidden mortgage. There's no judgment. There's no something the buyers are going to inherit sitting on the kitchen counter with them, and figuratively speaking, when they send their money in and sign all the papers and come home and then they get served with a lawsuit because the neighbors are fighting over something they didn't know about. Like it's clearing all those things. It's looking in the public records, the taxes, the HOAs, the mortgage. So a component of that is a very administrative component. It's we're gathering all the invoices. We're all banging our heads together with you over that one document that everyone's waiting for, the closing disclosure at the end of the process to all those numbers, all that culminates into this one document of here's what the seller owes on their mortgage. Here's how much the seller has paid HOA already. Here's what the buyer has to pay at closing. Here's the inspector's invoice. We are the party that's in the middle that's getting all those to the table. And then um, that is the document that instructs us on everyone has signed off that this is how much money is coming in. This is who's getting all the money. Yes, we're authorizing you to carry that out. And the other part of that is we hold all that money in our trust account until it's go time and we get the green light to send it where it needs to go. So
Yeah.
it's really the title transfer. The buyer is buying one of the biggest investments of their life. They're not going to inherit some kind of lien they didn't know about, didn't expect, and they're getting the right amount of land, the right house, everything that they're expecting to buy. And sometimes those two functions I think could be taken for granted. Like, of course, we're buying this house. It's right there. We saw it. That's the one we're buying. And of course, the attorney is not going to steal our money or do anything like that. And we're not going to talk too
Yeah.
much about that. But some googling would tell
In the
you that
Charlotte area, there's a pretty big story going on.
you could probably
So
throw out embezzlement or some kind of word in your Google search and find some things. But we're not going to talk about that. So,
uh
but that's obviously a hugely critical faction, and it's um, a trust factor, right? That this lender who's loaning you $500,000 based on your financial profile is also going out on a limb to send it to me to hold and then get it to the right place, right? There's a
mhm.
trust and millions of dollars go through my account every week, every month, whatever, and have to make sure it's getting to the right place and not a hacker that's sent us fraudulent
Yeah.
wiring instructions and all the things that could come with the game of telephone of getting the money where it actually needs to go. So those
It's
are
what
the
I recommend to people when you're at the bank doing your wire transfers get on the phone with the closing attorney and repeat it over the call. Don't do it over email, just in case you never know. Like you just said with hacking, get on the phone with them and confirm it right there. I think that's extremely important. And a lot of people don't realize, like, coming to closing, they're calling me, "What's your wire info?" I'm like, "You're not sending me the money. You're sending it to the closing attorney." Yeah, you're sending it to the
Yeah.
closing attorney. So
I mean, that's a whole breakout session of best practices for, don't call the number that you got in the email. You call the number from my website, lanelawclosings.com. Don't respond to the email and tell them there's a million different stories about that of people lurking in our emails, like pretending to be us, watching how people speak to each other and copying that and getting people to do things by email. And email is a very easy way for us to communicate legitimately, but also a very easy way for people anywhere in the world to hack in and tap in and get this intimate view of a very highly leveraged financial transaction. So we have to every single day we have to be wary of that, be
yeah,
looking for the next way and thinking very critically about every communication we get to make sure it's the right thing. And that's from my viewpoint, but then also coaching the buyers who and that's you play a big part in that. The real estate agent plays a big part in that of before people even like get that contract signed, they need to know what to look out for. They need to look out for that big, huge red warning in my email signature. They need to look out for anything that feels off, like it happens. Knock on wood,
uh-huh.
hasn't happened to me here, but it happens to other people. And I pay a lot of extra money every month to make sure it doesn't, because just one of those things could go south for everybody.
Yeah,
Someone's life savings, my life savings, like that's the stakes are insanely
yeah.
high. So it's a very important thing that, like I said, can get taken for granted of that the money gets to the right place, but there's a lot of reasons it can't, and a lot of reasons you have to have somebody you trust who will usher that process through.
Definitely. I think another question I get a lot that, is a good transition is, can you explain title insurance? And because I have a lot of people asking, well, why do I need that? If the lender's getting title insurance, so if anyone doesn't know, if you're buying a home and you are financing it, you're gonna pay for your lender to have title insurance. Now, if you pay cash, you can decide if you want title insurance. And also if you finance a house, you also have to decide if you want title insurance on the borrower side. So can you explain what title insurance does and the difference between the lender and the borrower title insurance?
Absolutely, yeah. And by the time people hear about title insurance, it's like, great, another line item that I don't like. No, I don't want to.
Mm.
I don't want to go to Best Buy and pay $99 for 2 years for my computer. Like it's not going to break. It'll be fine. I hate doing that personally, but title insurance is a different beast, and I'm a huge proponent, even though I don't make any extra money off of it. I always explain to people, homeowners insurance is sort of easy to conceptualize. It's fires and floods and physical damage to my house. Title insurance is what protects you against anything that would threaten your ownership rights in the house. And what that typically looks like is liens we didn't know about, judgments, things like that we didn't know about. So part of my job in doing the title searching is looking at the county register of deeds, the tax office, the court records for judgments, anything in the name of the sellers or people who've owned the house before the sellers, making sure none of that exists on public record and clearing it if it does. But then title insurance can fill in some of those gaps. And so I
Mhm.
guess this is where I give my disclaimer. This is not legal advice. Every case is different. Call me if you have a specific situation. This is all educational. Title insurance terms can vary from property to the next and title company to the next. Situations are going to be very fact dependent. But speaking in very broad strokes, title insurance can protect against things like 5 years ago, the property was conveyed, but it was a forgery and it never was supposed to. If that were to happen and you all of a sudden find yourself, you have a deed that didn't matter for anything because the person that sold it to you never actually legally owned it, that could be a total loss on your house. But if you don't have title insurance, then you might be stuck. If you do have title insurance, you might be covered. And the way it plays out is really just like any other insurance claim you would have to file. If you had to file a title insurance claim, the title company first is going to step in and try to resolve the situation. If it's an easy fix, it's paperwork that needs to be done to get fixed, they'll do that. Um, if it's bigger, if it's something like that, that would be potentially a total loss or a significant loss, like a mortgage that didn't get paid off, something like that, then there might be a lawsuit involved. And end of the day, if there's a huge amount to pay, then if it's covered, the insurance company's paying that big amount of money and you're not. Um, so before I did strictly closing business, I did some litigation related to title insurance where they'd refer to a title company would refer to us any of these claims that couldn't be resolved with a piece of paper and a handshake. And what those would look like would be the guy who had an equity line on his house and sold it, and then it didn't get paid off by the closing attorney at closing. And he just ran it back up and went on vacation and bought the jewelry and did all
Mhm.
this stuff. And all of a sudden, someone owns a house and some other guy's got a $90,000 debt against the house that he already sold. Title insurance would have to step in and cover that if it's covered under the policy and all that. Um, Same thing, like a document gets forged. I had a situation a while back where didn't happen in my firm, but it was something I was investigating for another reason. And somebody got a notice from their mortgage company about a payoff request. And said, well, I didn't order a payoff. What's going on? And they call and their house had been sold by a fraudulent company and a closing was done. Agents were involved, attorneys were involved. Someone forged a notary, did a mail away signing, and got it sold. But he had title insurance, and title insurance stepped in, rolled back the sale, got the property back in his name, and he wasn't out any money. He was able to sell his house and move on. But I mean, without that, he might be stuck. So
Now,
insurance is protecting those kinds of rights, keeping you just protected from those things that kind of I check the public records and can't see certain things, like the forgery and the hidden things. It can kind of fill in those gaps.
now, what if, I hear this sometimes, new construction. Oh, it's new. No one's owned that house before it was built.
Mhm.
What? I don't need title insurance if it's new
Yeah,
construction
right,
because there's
right.
no
Right,
problem.
it's good.
Yeah.
Mm. The easy example on that would be contractors. So, it- this is going down a very dry, nuanced path,
Mhm.
but for simplicity, in North Carolina, a contractor has basically 6 months to file a lien against property they worked on if they didn't get paid. So, owner hires a GC, builds a house, the plumbing guy drops off the toilets or the whatever, subcontractor goes under, doesn't pay them. In a roundabout way, there's a way for the subcontractor to file a lien against the actual property if they meet certain criteria and place a lien on the house effective not as of that date, but effective as of the first or the last time they hammered a nail or dropped off
Mhm.
toilets or whatever they did at the house. So plumber drops off their stuff, the equipment on August 1st, house closes on August 30th, and then the contractor files a lawsuit against the property and against the owner, previous owner in January. Well, they might actually have priority over, certainly if you pay cash, certainly over the owner, but also possibly against a lender. And so, even though the lender's mortgage is recorded in like the end of August, they still might be able to jump back in time. Um, there's exceptions and carve outs to that, but general premise, they might. And so the title insurance protects you from getting that knock on the door and saying, you got a lien on your house, buddy. I did work here and I never got paid by my sub or by my general contractor. And so even though, the builder did all their title work, they bought the land, they built all the stuff, there are still things that can pop up in between. And there are still things that it's not necessarily the ones that are recorded that are the issue. It's the things that don't get recorded or the things that pop up later that existed before, but you didn't know about until later on. That's where the title insurance fills in the gap. And to your point, so lender's title insurance protects the lender, obviously, insures them basically that their loan has first priority against the land, or second if it's a equity line, something. Um, so then if they needed to foreclose and all of a sudden there's this judgment that has priority over their loan, they've got title insurance to protect them and their rights, their place in line, if you will. Owner's title protects the owner against having to pay a judgment or something like that that was against their house that they didn't know about.
Mhm.
Now, what people don't really realize is you'll see the line item on the closing disclosure, and it might say $800 for owner's title insurance, $200 for lender's title insurance. So all those rates are set by state law in North and South Carolina. Um, it's not like you haggle from one company to the next. But if you were to say, I don't want owner's title, this is a scam, I'm not paying another thing at closing, you can waive that. It's optional. You can't waive lender's title insurance if the lender asks for it. But the incremental cost increase to add on owners when you're already getting lenders is not $800. It's typically like $100 or something like that. I'm making up numbers, but the cost benefit analysis is like, do I pay $100 extra at closing and I'm protected against these things for the rest of the time I own this house, or am I taking my chances?
Mhm.
And so it's not $1,000. It's not a new annual subscription. It's not the title insurance bills here for the month. It's one
It's a
time
one-time cost. One-time cost that goes with.
cost, already included. By the time people are at the closing table, I say this is already included in what you've already sent me for closing. Protects you as long as you own the house. Highly recommend it. And it's hard to shrink all that into like, here's the reason you need title insurance, because you get on this rambling tangent of
Uh-huh.
could be a lien, could be a fence on your
Mhm.
property, could be this, could be that. But it's still
Peace of mind. What you're paying for at the end of the day is peace of mind.
right, and know that you're protected in another
Yeah.
way.
Yeah, it's definitely just that peace of mind. You know, the biggest asset you probably own is protected, or you're protected as best as you can be in case anything was to pop up. Same thing if it's new construction, something can still happen. So just having that peace of mind, um,
Mhm.
you know, and with the incentives you're getting on new construction right now and the credit you're getting, it's probably going to be it's going to be covered. Yeah, so just get it. You know, it's just something that's going to go into it. So you know, as we're talking about closing, um, you know, this is probably going to be a a question that's not very nuanced, it's very specific. But what do you think causes the most delays in closing right
Money things. It's obviously anything that changes between the
now? Mhm.
contract and the closing date. I mean, the guidance is kind of like get all your affairs in order by the time you're ready to put in the offer and get pre-approved, and then hold your breath and don't do anything. Don't quit your
Mhm.
job. Don't buy the boat.
Yeah.
Don't buy the car. Those are the easy ones, but just don't move money between accounts. It's always sometimes it's the people that are too proactive and too excited that
Mhm.
cause problems without realizing it. And
Like gifts, gift funds are a big thing on our end.
you know, the example recently was like, I don't know if my gift donor can get the funds to you. I'll just have them wire it to me and then I'll send it to you. It's like, call Matt first
Yeah.
and make sure that's okay. Or, my gosh, I just realized this account I was going to use is only has branches in Idaho and they won't let me wire the money except unless I go to a branch. I'll just send it from his savings account. We'll call Matt first, make sure that's an account they've looked at. Because if the money hits my account from that account, we might be going back to underwriting when you're waiting for your keys. Um, it's the little things like that. It's like I was so excited. I went ahead and moved the money out of my savings account and put it into my personal account, and or took it out of my business and put it in my personal. And all of a sudden, they've created a new step on your checklist of we didn't look at that account. We've got a source where the money comes from, things like that. Or I've had people in the past. It's like, we're gonna get all of our furniture. We're gonna go be ready on closing day. The truck's gonna be in the driveway before we get the keys, and we're gonna get our Pottery Barn furniture. And go check out and buy our big sofa. Like, yeah, of course we want 2% back on our purchase. That's like $200. That's great. Yeah, we'll take your store card. Of course. We'll just cancel it in like a month, whatever. And then it's a new credit pull at the last
Oh yeah.
second, and then it flags on your end, and then everyone's upset. And it's staying like focused on, and people like the buyers fill out the loan application, but they don't have a good concept the way we do of like what all is on there, right? And what all
Yeah.
needs to stay the same. Um,
And
so
just be proactive, because we will find it. Like, don't try to hide it, because
no.
it's going to pop up. And
Yeah,
then
so I used to do more like new construction, and most of the time the buyers are sitting in our office waiting for the lender to approve their signatures, and then they can have their keys and they can go and they can be done. And it's always a awkward spot for us when we're sitting there and they're waiting and waiting. There's nothing we can do to speed up the process. So we've done our part and handed it off, and waiting and waiting and waiting, and haven't gotten the approval yet. And had a guy that, or I think it was a guy that was waiting and waiting, waiting. Lender wouldn't tell us anything. Went on for hours sitting in our office, and they're like, "Oh, there's some issue and something I could do to fix it." So they don't tell me what's going on, but just whatever. And then eventually they told us something about their verification of employment they didn't have done yet or something. I was like, well, maybe you should have done that before, like now. But come to find out the buyer had gotten laid off like a few days before closing. It didn't tell anybody. And like they're gonna
verification of employment. They're going to do a verification of employment.
He's gonna find out.
Yeah.
Not gonna. They're
Yeah.
the people take for granted like, oh yeah, I need $600,000 for this house that I want, so they'll give it to me. And like, well, no, that's a different company that doesn't know you personally, that's offering to not only loan you $600,000 at, relatively speaking, a pretty low interest rate, 5%, 7%, whatever, still in the grand scheme, pretty low. And all they're saying is just pay us back within like 30 years. Like they're going to look at your financials and make sure you're actually going to be able to pay them back. And if you don't have the job you did 30 days ago, then it's not going to happen. So
Yeah.
I think people kind of lose sight of like the forest for the trees there, of like, gosh, this is invasive and annoying. And well, all those rates you're getting, that loan program you're getting, is all conditioned on them having security that you are who you say you are and can actually pay it back. So it's always the financial things that slow things down. And sometimes it's not people acting maliciously. It's just people not thinking about it, or not listening to Matt when he says do this or don't do that, or not listening to their agent when they say, this is really important. I promise you got to do this. And it always ends up as like, oh, you didn't mean me, right? I thought you meant like that happens to some people, but like we were fine to do it. Like we gotta hold tight here and just lock it in at the contract time and stay a steady course through closing. But
Yeah.
those are
Well,
big ones.
we've talked a lot focused on the buyer side. Let's, make a quick switch to the seller side. And I think probably one of the biggest issues you probably deal with right now, especially, with it's the new thing. What are your feelings on solar panels and their liens? Do they cause you? Is that probably your biggest lien that you deal with, is solar panels?
Knock on wood, I don't see a lot. I'm gonna sign off of here and go get the 3 titles today with solar payoffs or something, just to jinx me. But fortunately, I don't see it a whole lot. I'm pretty jaded against it based on what I have seen.
So for those of you that don't know, if you're selling your house with solar panels, that lien has to be satisfied, because I've never seen one where a buyer takes over those liens. Now there may have been a few, but the ones I've dealt with,
yeah, I want to say very rarely they will like kind of like unpark their lien and put it back on and allow sort of a changeover. But bottom line is it's got to be paid eventually. So you're either stepping into a new obligation or it's got to be paid off. And I mean, the sale is always like, oh, you could save $50 a month on your electricity bill by getting these. And all you got to do is we'll let you pay it off for 30 years. It's fine. It's just, $100 a month for 30 years. And, if you want to sell before 30 years, by the way, that $26,000 coming with you. But, in the meantime, you just kick that can down the road and theoretically you'll save some money, hopefully, probably do us more benefit than you. But we'll put them on there and we get paid up front, and we get your your loan up front, but eventually you'll see the benefits too. And year 19 or so you'll break even. But no offense to my solar friends out there, but there's legitimate benefits. But people just a lot of times either don't understand what they're getting into,
Mhm,
or again, it's not going to happen to me, right? I'll pay that off eventually, and then a year from now you have a baby and want a bigger house, or life changes and
mhm.
it's time to move, and going in with a more clear expectation of like, I need to be ready to pay this off, um, I think would benefit a lot of people, just kind of not thinking about that, or hoping it
Yeah,
never comes to that.
or having that expectation when you're selling your house, you're more than likely gonna have to pay off your solar
Right.
in that scenario.
Going to be
Um,
there. Mhm.
yeah. Now, what's a misconception that you think people have? Maybe not those who are from the Carolinas because they're used to closing with attorney, but we have more and more people moving to the Carolinas from the West Coast, from up north. Well, I know on the West Coast, they don't even work with an attorney. A lot of you're working with a title company. So, what do you say to those people coming here of what's different in the Carolinas, or what do you like that the Carolinas has that in place that you are dealing with an attorney rather than just solely a title company when it comes to your closing?
Well, I think a big part of this sell is again that trust factor of like, this is a lot of money that has to be held somewhere, and a buyer and a seller on the street can't easily come together and say, "Oh, HOA dues, here's how we prorate those. Taxes, here we prorate those. You got a judge and payoff. You got to pay that. I'll take this. I've got these That's what we do is we put all that together, and that process, as you know, happens over 30 days, 45 days, 60 days. So earnest money has to sit somewhere. Money has to sit somewhere. Money's got to go out. That trust factor, I think of, we have a licensed attorney doing this. They are regulated by the state bar, and they have real consequences for making sure that money gets to the right place and not taking it themselves, or
Mhm.
letting someone else take it. Easier said than done, I guess, in the
Yeah.
real world. Attorneys are humans too, and some are honest and good, and some are,
Uh-huh.
anyways.
Mhm.
I mean, I think that's a sell, is having attorneys involved in that process. I I'm a believer in the title process. I feel like other states, there's been this kind of push against title insurance, a bit a push against like what even gets reported in the transaction as far as title goes. And I guess I'm maybe an antiquated mindset, or whatever, stubborn or whatever, but I still feel like it's important to go through that process, and it's a way to funnel the expertise and the specialization through someone who's been doing this a long time, right? And not just like, I'm a successful business owner and another business I would like to own is a settlement company. So let's jump in and start getting an escrow account open and start slapping out title insurance. And it becomes a lot more like transactional and
Mhm.
financial, right? Like if it's just, I got to do a million of these, we're probably going to get sued on one or two, but financially we'll come out ahead if we're
Mhm.
cranking out volume. Well, that one or two is $700,000 to the Jones family and $600,000 to the Smith family. That was their whole inheritance that got lost, or whatever. Like
Mhm.
the mortgage that didn't get collected at closing or whatever. Like those are real people with all their life savings gone out the window, right? So I, never want to be the biggest closing attorney in town or in the country or whatever. I want to do enough to make it financially worthwhile for me, candidly, but also to be able to keep my hands on every transaction and keep quality control up from the client perspective, but also just from the title and security perspective too.
Mhm.
I don't want it to turn into a churn out, burnout kind of thing where we lose perspective on some of that stuff.
Yeah.
So to me,
What
that still funnels back to attorneys being involved. And
Yeah. So, as we get to the end of this episode, let's go through how everyone that takes part of the transaction, let's start with the real estate agent side. What separates the great realtors from the average realtors during a transaction that you see?
well, the easy answer is always communication, right? You got to be present, you got to be involved, you got to take personal interest in your
Uh-huh.
transactions. You're not just a salesperson, or if you are, you have a team, a transaction coordinator, somebody who's doing the logistics for you, but someone who's pushing the thing forward. And that goes for everybody sitting at the table. The mortgage broker's got to be involved, the agent, the closing
Mhm.
attorney, everybody. But I'd say beyond that, on the microscopic level for the agents, a lot of times is one, it's educating their clients up front, giving them a real expectation of what's going to happen, what they're going to expect. And then, like, from your perspective, like Matt starts asking me for my tax returns and my stock account and whatever. Well, that feels very invasive, but my agent told me that he's going to need all that. His underwriters
Mhm.
are going to need all that information. So it's not a, doesn't feel personal. It's just, this is the process. As uncomfortable or annoying as it might be, like, this is what we got to do. Managing the expectations, but then also managing the personalities of the client is, I think, is a really big deal. Um, the closings I can remember that have really blown up is typically where the seller or the buyer or both are just kind of at their wits' end with the process. And either they didn't know what to expect, or they've just got a lot going on in their lives and emotions are running over. And because residential real estate skews to be quite emotional, and
Mhm.
rightfully so, it's, the upsell is we get to be involved in some of the biggest moments of people's lives, not only their biggest investment in a lot of cases, but getting down to the why of it all is, a lot of people are buying and selling houses because they're having kids, or could be their family member has passed away, or they're getting divorced. But a lot of these things don't happen in a vacuum. They're getting a new job, they're moving to a new city, they're having kids, their family's growing or shrinking or changing. All that comes with the emotions of, wow, we're so excited. We're really, this is our forever house. We're so excited to get in this house. Well, what do you mean it has mold now? That's very upsetting. Or, gosh, it makes sense for us to sell this house for X, Y, and Z reasons, but we had so many memories here and this is really upsetting. And now the buyer's asking us to fix the carpet. Well, that's our carpet. That feels personal. And the agents that can kind of keep those things at bay and stay transactional with it. Like, I always try to bring people back to the middle, that we all got here because everyone wanted to do the same thing. Like,
Mhm.
the kind of law I practice, the kind of work you do is transactional, and it's not always happy or easy, but it at least starts out with everybody in agreement, right?
Mhm.
I'm selling you this house. You're buying this house from me. We agreed on the price. We agreed on the general terms. This attorney is the one who's going to do it. This is the lender that's going to do it. Here we are. The longer we can keep our eyes on that general arrangement, the better off people can manage the hiccups that come along the
Mhm.
way. As soon as it turns adversarial and they're trying to get one over on me or whatever, is where things kind of go off the
Mhm.
rails and we hit in these like roadblocks of, like, people get stubborn about random things, and they're not keeping their eyes on their goals that they originally had for buying or selling. So the agents who can really keep that at bay are the ones, I think, who do a lot of kind of silent heroics of keeping things staying the course.
Mhm.
And the ones that I work with and the ones that I know well do a good job of kind of cluing me in on some of that stuff. And it's not always anything that necessarily I need to do, but the more I can know, the better, right? Like, I've had people show up at closing to sell their house, and immediately I'm just like, man, something is off here. And then later find out, oh yeah, they're separated. They haven't seen each other in 6 months. They're getting divorced. Well, if I had known that, that would
Yeah.
that's why I would say, do they need to sign separately? But also, just like knowing the context helps with a lot of that. It also helps me prevent fraud and stuff. If I generally like to have a good story of, like, why people are selling, why are people buying. And if you know your agents and loan officers you work well enough with, it's easier for me to sort of detect a red flag when something veers off of that.
Mhm.
But but yeah, the agents that I work with the most, who know me the best, they'll just kind of, just in conversation, clue me in on, yeah, I got my first time home buyers. They're excited to buy this house, or yeah, my sellers, they're moving to Ohio for work, and that's why they're selling, and the ones who can just sort of manage all those in between things is really where we have the best closing.
Okay. So as we get to the end here and kind of working off the title of the show, when someone walks away from the closing table, what do you want them to remember about their experience working with Lane Law?
Yeah, I would, for one, I would hope that people feel more educated about what they just did than when they started. I'm not a mortgage pro, but I know enough to sort of fill in gaps and help at the closing table as that comes up. I'm not a real estate agent, but I can help with a little bit of that. I could certainly help with the legal documentation, but I don't want people to leave thinking, man, what did I just sign? Or, what am I even do now? Like, I know how much my monthly payment is, but like, what does this whole mortgage thing mean? Like, so ideally they're feeling more educated. And then, I mean, ultimately just feeling secure and happy in what they just did, right? Like, man, I'm so excited that I sold that house. Like, that process was easy. I've equated the role of a closing attorney is sometimes like a referee in a sporting event.
Mhm.
If we become the star of the show, it's probably because we did something wrong. Like,
Mhm.
if you know a referee's name, it's because they made a bad call or they did
Yeah.
something that irritated half of the people there. And for better or worse, there's a lot of stuff we do that just, like you said, people don't really understand what we do and the whole title process. Like, people don't really get that. And a lot of the times, if the title is clear, I'm not necessarily sitting down with you for an hour and talking to you about the title. It's just everything is good. But certainly, if there's a title problem we got to fix, all of a sudden we're the bad guy or whatever. But mostly, it just I want people to feel like it was easy enough, or they feel like a relief when they're done. Like, they explained everything to me well, and I get this now, and I know what my payment is, and I know kind of the benefits of like, what if I paid early, and I know I can pay early. There's no fee on that. We went through that, or just those kinds of things. Like, they're done now, and they know what to do, and not just like,
Mhm.
gosh, I'm a homeowner. What does that mean? Who do I pay? What do I do from here? Um, so it's really that, and I equate my job sometimes as like being a stand-up comedian. I got to go into a room cold and sort of read my crowd and not just to write jokes or whatever, but I would I don't think anybody would want to hear that. But just from experience being able to tell sort of who I'm working with. Like I said, like, agents who I work with a lot, like, have clued me in on that already by the time we get to closing day. But if you're a first time home buyer, you might want to go through everything a little more cautiously. If you've sold 8 homes in your lifetime, this might be a paperwork annoyance and you want to sign and look through the closing disclosure and see how much money you're getting paid and be done. But it's gauging that with every client too, and trying to customize the experience to them. So again, to get to that same point of like, they feel heard and they feel like they've done the right thing and they're happy with what they've done, happy with my involvement. They'll come back when they refinance,
Yeah.
refer to me next time. But a lot of that is, it depends so much on who you're dealing with. It's personality type, someone wanting to read everything, personality type, someone wanting to skim through everything and breeze on, or it's experience and any kind of burning questions they have. But it's really just being open to that and looking kind of personality cues and everything to understand who I'm dealing with and
Yeah.
make sure I'm meeting them where they are.
And I think after this conversation, my three tips for people to come away with would be: don't underestimate the value of title insurance. Number two, in the market that we're in right now, where interest rates are, people forget about when you refinance, a closing attorney has to be involved. So you'll probably get the most savings going back to the same attorney that did your closing. A, you're a repeat client, but two, it's easier for them to research the title insurance on you, or they might be able to save you
You get
going
a
back to
Yeah.
that same office.
So normally it's a formula calculation, but if you've got title insurance from your purchase and you go refinance, You will have to pay lender's title insurance again every time you refinance, not owners, but lenders. But then having your previous title insurance policy will save you sometimes a lot of money in the long run or at closing by having that. And I also throw discounts at my repeat
Yeah.
clients when they're buying and then refinancing and selling. I always try to, it makes it easier for me if it's title I've looked at, it's personal information I've
Oh
already
yeah.
got in my system. Like it's easier and cheaper for me to process anyways, but I always try to work
It's
with
the same.
clients.
Yeah, it's the same thing on our side. Like if you're selling your house and buying and doing multiple transactions, or you're having, an unfortunate relationship ends and they have to sell a house and buy two separate houses now, using the same parties for most of that eases the process because we're collecting the same data that we're going to need, the same information we're going to need, and we understand the total situation because we're dealing with it on all sides. And you still get your, we don't favor one side to the other, but you're going through an unfortunate situation. I can't tell the exes about each other's financial thing, but I know the total picture, so it's easier to move what needs, to be collected along the way. And I'm sure it's the same with you. Um, so, we had a great conversation today. If people wanted to connect with you, if, people are looking for a new closing attorney to get in contact with, or if someone's, refinancing and you don't really have a real estate agent to fall back on, and, you're looking for those options, what's the best way for people to get in contact with?
Well, you reminded me of one more sort of
Yeah.
myth or misconception, whatever, is that a lot of times buyers and clients don't even know that they can pick their closing attorney, right? That's
Hmm.
not a thing. So, I mean, in most cases in North Carolina and South Carolina, where I'm licensed in both of those states, if you're a buyer, a borrower, even a seller, you can hire your own attorney and contact. Or if you're an agent, obviously the agents a lot of times or the mortgage brokers are the ones making those recommendations. But I'm always looking for new connections, both on individual clients and also agents, loan officers who are looking for that closing attorney relationship. And I've alluded to it, but I like working with people that we grow together. Like, I mean, you're one. I'm
Hmm.
not here to take any credit for any success you've had, but there's people in this industry I've grown with, and it's
No.
always nice to bounce ideas off each other as we're growing. And those have been my best closing relationships are the people who are kind of into that relationship. And at my firm, I'm involved in every single part of the closing from start to finish. So having that attorney involvement is always part of my plug. But I'll tell you two things is most of my social media presence I run through my personal accounts on Facebook and Instagram. It's a nice blend of cute kid photos, funny, super funny jokes and stuff. Then, every now and then once a quarter, I'll throw something useful or educational out there.
Yeah.
But
He throws occasional trivia out for you to,
pictures of what
yeah.
I'm grilling or situations that really frustrated me that I've figured out how to spin into a positive lesson with no other kind of
Yeah.
nothing, no backstory behind it, just something I
Yeah.
thought of this morning. And anyways, I do that on my personal Facebook account and Instagram account. And then I'll plug my firm website to lanelawclosings.com. I've got couple things on there. It's got my email address, my phone number to reach me, send new closings, any kind of questions, whatever. Want to connect and get coffee, I'm always open for that. But then also on my website, bottom right corner, there's a little blue house icon with a heart in it. If you click on that, you can do fee estimates. It can be seller net sheets, buyer fee estimates, seller fee estimates. It's got title insurance quotes plugged in there. You go in the property address, kind of general information, and it's completely free. If you have issues, I can help you get set up with an account on it. And even if you're doing like a seller presentation, you're doing a borrower consultation, gives you a really great start for estimating fees and all that. So it's a good way to don't even have to call me. You can use that and try that out. But always love to meet new people in this industry. And that's got my best Charlie at lanelawclosings.com email address on my website. But it's the best way to reach me for any new contracts or any other kind of information we can share.
Okay. And, people, I get this asked all the time. How fast can you close? How fast can you close? Is there like, yeah, with us, unfortunately, depending on the loan type, there's certain disclosure time periods that no matter how fast we want to go, we have to hit those disclosure time periods. So that is determinant of how fast we can go is, well, what loan are we using and what are the government set disclosure timelines that have to be met, for us to do that. So realistically with that, what should people expect? How fast can you do it if the stars align and everything happens and then your normal, time frame?
See, in our industry, we have a really great answer for that. Says it depends.
Yeah. Yeah.
um, like you said, a big factor is there a lender involved? How quickly can they close? That's the easy answer. Typically, if for most of your sort of normal deals, if you're blazing fast, it could be 2 weeks. It might be 3 weeks. Almost always, I can get title ordered and flipped around in that timeline. Um, most attorneys use like an outside title called title abstractor that actually pulls the records for us. Then we go through and review and sign off and do all the title ordering. I use people like that for most of my closings, but being on my own, I'm not like strapped down to that. Like if there's a title I want to just search right away, I can do that if I want to. I could go home tonight and whip around a title search. Um, so, I mean, I've had people call me on Friday afternoon and say, "Hey, we got this weird cash situation. Like, how quickly could get this done and closed by Monday afternoon?" Like, that can happen. I'm not going to say that's typical. Not going to promise that every single closing I turn around in 24 hours or 48 hours or whatever. Um, but I can do it if the main limiting factors are, like you said, lender approval has to get through. Can't waive that. Can't speed that up. An HOA, we have to get a statement. You can rush it and get it in a day or 2 days. Mortgage payoff usually takes a couple days or less. It's really just as quickly as I can get that information from the buyers and sellers. If it's land or it's owned outright, no HOA, no mortgage, whatever. I mean, normally a day or two, we can do it if we
Okay.
absolutely have to. Typical timeline, of course, follows along with the contract, right? If it's 30 days, to get it closed in 30 days, like I'll get it closed when that says it. But part of the benefit of being on my own is I don't have to throw your file in a queue and say, well, we got 8 more to process first that are closing in September, but I'll get there when we get there. Like I can bump
The decision makers right there. The decision makers right there. Yeah.
cram in another closing and I want to go home tonight and like pop out a title and get a file open and do it, we can do it. If, I'm just too busy that month or it's the last day of the month or whatever, I say, look, love to, but I could get it done next week. But I was able to save one recently that was closing at another firm that ran into some issues, shall we say, and they needed a new place to go, and was able to get it within about a week done with a lender involved. But they, obviously had some of their lead up and underwriting done at that point. But was able to whip around a title and order an HOA and do all that stuff. And we closed about a week after their normal date, kept it inside the grace period of the
Awesome.
contract. But yeah, it's a lot of flexibility. I hate saying no. So typically if someone says, "Can you close it in 2 days?" I'm say, "Let's do it. Let's try."
Yeah. There we go.
See what we do. But like I said, it depends is the overarching answer
Definitely.
there. And normally I'm ready to try to make it happen. So
Well, I can vouch Charlie and his team, or Charlie is his team, can definitely get it done. They're great to work with, whether, buying, selling, or refinancing. So, be sure to check Charlie out, check out his socials. I want to thank you guys for listening today to Behind the Closing Table. Thank you for your time today, Charlie, and we will talk with everyone soon. Have a great day.
thank you, Matt. Yeah, vouch for you too. It's always great.
Appreciate it. Awesome. Thank you.
All right.
See ya.